What's up, traders? Anthony Crudelli here, and thank you for tuning in to the Futures Radio Show podcast. Man, am I excited to bring you today's guest and show. Everybody's been asking me, Anthony, when are we getting micro WTI crude oil futures? Well, the wait is almost over, everybody. It's now confirmed. July 12th, micro WTI crude oil futures are coming to CME. So today, I brought on the man who's responsible for bringing micro crude oil futures to us traders. His name is Derek Sammann. Derek is the Senior Managing Director and Global Head of Commodities and Options Products at CME Group. So, of course, today's show was primarily focused on micro WTI crude oil futures. But at the end of the show, we talk about a product that I've really grown to love. And it's not a tradable product, but it is a tool that's on CME Group's website called CVOL. It's CME Group's volatility indexes. It's just a really great tool that I think is going to help a lot of traders out there make better decisions in their trading. So if you're listening to this on audio, you might want to hop over to anthonycrudelli.com or go to YouTube to watch us do a screen share about CVOL. Now remember, everybody, Futures Radio Show podcast is sponsored by CME Group. And in July, micro WTI futures are coming to CME. They'll be 1/10 the size of the benchmark WTI futures and will provide traders with a new tool to fine-tune their exposure to crude oil markets and enhance their trading strategies in an efficient, more precise way. To learn more, go to activetrader.cmegroup.com. Futures Radio Show is also sponsored by Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-mini Russell 2000 futures symbol RTY and micro E-mini Russell 2000 futures symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. Derek, welcome back to the show.
Thanks, Anthony. It's been too long since we've been together.
I know, man. It's been a couple of years. And hopefully this year we're back on track meeting down here in Naples for GFLC.
Yeah, Naples in November sounds pretty sweet as opposed to Chicago in November. So sign me up for that, man.
Yeah, I'm looking forward to it. And going to be a lot to talk about this year because at GFLC, and I think just the last couple of years, I would go out and say that I would think that these last 2 years, which is incredible to say, there's probably the biggest release of products. And this is my 25th year from being a clerk and a member of everything at CME Group that I have ever seen. And this product that we're going to talk about today is probably going to be definitely top 1 or 2 of the most popular of the new products launched. And that's micro WTI crude oil.
Yeah, it's been a long time coming. I got to tell you, I agree. This is my 30th year in financial services, 16 years as a trader, and now 14, almost 15 years on the exchange side. I came out of school in 1990, and 30 years in, 2020 was such a weird, unique, totally unprecedented and unexpected kind of a year. And that leads to all kinds of dislocation. That means all kinds of innovation opportunities. And we've really kind of thrown ourselves into how do we best serve client needs in such unprecedented times. It's been fun. It's been terrifying. It's been a white knuckle ride the whole time, but man, it's been fun working with our clients and helping them problem solve through all these challenges these last 12 to 18 months.
I know I've had this conversation with you and Tim McCourt. I mean, you two guys really have just put out some amazing products, and we've had some really good conversations about them. And micro WTI crude oil is, I would say, similar in popularity is going to be with micro Bitcoin, micro E-mini S&P. I mean, micro crude oil is just something that so many traders have said to me over the years. You and I have actually talked about this. I had so many emails come in and say, we want this product.
Yeah.
We're here now. Talk to us about the launch.
Yeah, we're excited. And I'll be honest with you, I remember having this conversation in November 2019 down in Naples, and we were looking very closely at it. You were pushing me. Every one of your client calls is, when are you guys going to do it? It makes a ton of sense. And, just for lots of different reasons, I think we're at the point now where it's overwhelming need meets absolute perfect timing for a product that is on the move right now. And with prices back up around, I think we're at 72 today in TI and 74 in Brent. It couldn't be at a better time with prices going up to, deliver a product that's right-sized, much in the same way that Tim talked to you about the growth in the underlying equities market, making the contract bigger and bigger. So it's a perfect time to be rolling out smaller size contracts for a customer base that is already aggressively trading our CL contract, but it's such a big contract. When price goes up, it's that much of a bigger contract. So overwhelming demand, great opportunity with the inflow of retail participation in markets across the board, not just in futures, but in securities as well. What a perfect time to be rolling product out in conjunction with our channel partners and distribution and broker partners for product that's right sized, that's timed right now, that's just a really, really good fit for customers and what they're looking for to be able to play market volatility.
No, I completely agree with you. And when I look at micro WTI crude oil, people that aren't familiar with maybe futures markets, right? You get a lot of people that are just traders and are investors, and they always say, "What's the best way to trade crude oil?" And to me, it's crude oil. And for a lot of those people that are new, possibly to futures, that was a pretty big contract. With this, I think this opens the door similar to kind of micro Bitcoin for maybe people that didn't want to open up a crypto account, or the Bitcoin contract was too big. And now you had the micro Bitcoin, and now you have this crude oil product, which is really the center of the universe, we'll call it, in a sense, of oil. And I know for myself, like you said, the higher the prices get, and I lately this has been a product I've been trading quite a bit, is the crude oil product. Really looking forward to the micro because it's in a dominant trend. There's so many things going on that oil's always a central focus anyway, but even more so now. So I think the timing is really good for this launch. But I want to go into a little bit of the specs because there's certain things about it that are that I think are very interesting. Obviously, 1/10 the size is the one thing that everybody knows. But go into behind the scenes. What are the specs of this product?
Yeah. So we've got, as you know, CL is our flagship physically delivered contract. We do have a mini contract that actually trades fairly actively. It's half the size of the main contract. So that's a cash settled contract, and that settles T-1 to the CL contract. So it settles the day before based on WTI, the CL settlement for that particular day. So we already have a physical and a financial settled contract. So to be as easy and as intuitive as possible to work within the product set that we already have, we actually lined up the expiration of our micro contract, which is also financially settled, in line with our other financially settled mini products. So that also settles to the same day T-1. So it's a penultimate contract versus the CL contracts. So now we have two flavors of crude right now, which is in the WTI complex. Physical WTI, we got the mini, which is half the size, and then the micro, which is settled to the same day penultimate as the mini. So the portfolio holds, and you've got three different versions to choose from based on what your needs are, how you're operating in the market. And with crude now at 72, and this is a 100-barrel contract as opposed to the main contract, which is 1,000 barrels. You've got a contract size that's much more appropriately sized, and with the margins appropriately sized for your retail or self-directed trader. And that's been the basis, that's been the mindset, and that's been the kind of the proven value of these micro contracts through what we learned in gold when we launched micro gold back in 2010, what we learned through micro equities in 2018, what we've now learned from micro Bitcoin. And so this is now that next evolution and that step. And Anthony, you know this, our three biggest, most actively traded products by the retail customer in futures are equities, gold, and WTI. And so now we've got big size contracts, so institutional size contracts in all three asset classes in the benchmarks. We've got minis, and then we've got micros. So it really is the full soup to nuts based on who you are and what your needs are. Are you a hedger? Are you a speculator? Are you in it for day trade? Are you a carry guy? We've got the right products with the right risk tolerance profile for any customer that wants to be in these three most popular retail products that we have.
Yeah, I believe that this is going to bring in a lot of people that maybe have not traded futures before into futures markets. I really do believe that because you have so many people that are looking at these ETFs for oil that don't move with the actual price of oil. I mean, they may say they do, but if you actually want to be able to go and trade the price of oil, this is going to be a great place for them. And a couple of things I want to talk about with this. Number one is I'm glad that it's a cash settled product because I think that kind of takes the pressure off for that newer trader when it comes to settlement and certain things like that going through their mind that it's physically settled. I wouldn't think that somebody that new would be obviously taking physical settlement of it. So I think that the cash settled is nice, but as traders, There's a couple things I want to run by you and see and ask you about this. Number one is, because I'm an active trader of crude oil, how fungible is it between the big and the mini? So, for example, if I'm long, or not necessarily not the mini, let's go to the big. If I'm long crude oil, the big contracts, and I want to start scaling out with micros, is that fungible?
From a risk and economic risk point of view, yes, but they're not fungible to the extent that if I'm long 10 micros and short a CL, because one's financial, one's physical, they don't wash themselves out. So from a risk point of view and from a pricing kind of a mathematical risk point of view, yeah, you'll effectively be risk neutral if you're a long 10 micros and short one big. But we're anticipating in most of our contracts, everybody, by the time you get into kind of that last week of trading, people either trade out and close their position, or for the most part, 90% of the customers roll and carry that position over into the new month. So from a risk tolerance point of view, we expect a lot of trading, and particularly those that want to fine tune their exposure, that, the big contract of 1,000 barrels maybe is to gross in instrument. So now you've actually got the ability to have a 100-barrel contract to kind of smooth out your risk profile. So from an economic point of view, absolutely risk neutral. From a fungibility, hey, can I just take my 10 mini short and my one physically settled long? Those won't net out from a delivery point of view. One's financial, one's physical. But if you're just trying to manage your risk profile from a risk basis, yeah, those will cancel out.
Yeah, that's important. So basically, if you're long one big CL and you're short 10 micros on the day of settlement, you potentially could get, the 10 shorts will be cash settled, but the long one will then be physically settled.
Remember, they settle on different days. So the mini and the micro are going to be settling T-1. So you can't actually take them all the way in. So you'd either have to reverse that back out, or you'd end up with, you have a financial position that you have in the T-1. But that's where most people won't take that spread all the way through into, then you actually have an offset, because you'll have a risk position, because once your financial expires on T-1, you'd be left with the outstanding position on the physical and CL. So that's what I'm saying. Most people are going to be out. Almost everybody tends to trade out of this by the time you get into the last day of delivery. So they're not fungible to the extent that you carry it all the way through expiration. If you're trading, all the way through up until the day before, they're going to be hit because they're going to settle at the same price. Remember, minis and micros settle to the WTI price on the day before CL's expiration. So from a pricing point of view, they're going to maintain that price alignment, but you won't be able to carry them through all the way through because they're going to expire on 2 different days.
Ah, gotcha. So that's something obviously you guys did on purpose to kind of prevent. Okay.
Yeah, and the idea was, you actually mentioned it yourself. There's retail folks don't want to be in a position of the nuances, and quite frankly, the really sophisticated nuances of physical delivery. That's not what the financial contracts and the participants want to be involved in. They just want to track the price of oil, and the global price of oil is set by WTI Global. We know that. We see that in our volumes. We see that in our open interest. We hear that from our customers. So this is the best tool for customers to get the direct price of where that price setting mechanism is in WTI, in a product and a package that tracks the WTI physical future, but doesn't complicate things with the need to be in the physical delivery process, which for your typical active trader, that's not a place they want to be. That's physical delivery is a place for the big commercial participants.
Yeah, absolutely. And I could see a lot of the bigger players starting to use the micros because if I'm long a bunch of oil and it gets to an area where, I'm going to take physical delivery on them, but I think it's reached a price that, hey, I think, maybe I want to peel some off. They could start doing some scale. I'm a big scaler, so I believe that scaling is a great way to trade. And now you can start scaling with micro. So there's going to be a lot of ways this is going to be used. And going back to the fungible side of things, options. Now, if I have an options position on in the big, because they're not going to be micro options right away.
Correct. We're just launching the futures to get that off the ground and see how that goes.
But if I'm in an options position, it's basically the same thing, right? I could use them to offset some risk, but once again, not fungible. So you can't use the micros for the options.
You can up until the point where, and I think the options expire, I think the week before the futures do. So you then end up in a situation where you'd have the first contract to expire would be the WTI option. And then after that, you'd have the micro expire, and then you'd have the CL, the physical contract. So up until, outside of that expiration week, we anticipate that big customers and small customers are really using all of the instruments, and it just adds more liquidity into the overall pool, because we absolutely believe that this is going to bring in a fair amount of traders that are sitting on the sidelines when they can only access, to your point, an ETF, which is obviously a much less liquid contract, but in smaller bite-sized pieces, or the big institutional contract where the real price is actually. Now we're creating the best of all worlds, which is a bite-sized risk profile that is directly connected to the actual underlying price of the oil market itself. So that's the beauty of this whole thing. So we anticipate, as we've seen in other markets, minis, micros, bigs, options as a portfolio of products that customers are using in aggregate, and they'll just fine tune their positions as you get into maybe expiration cycle or rolling positions. But we anticipate our largest participants are going to be carrying risk in all of those products and trading between them.
Yeah, I think this is going to be embraced right out of the gate. It's going to be a huge product. Derek, we're going to take a break here in a moment. We're going to talk about CVOL, which I think is a really awesome tool. But before we do, we covered quite a bit today with Micro WTI crude oil futures, but is there anything we missed? Is there anything else that we as traders should know about this product?
The beauty of it is, Anthony, this is a product that's well known to the market. And because we've been hearing for like 2 years, hey, when are you going to get us a micro-sized contract? There's not a lot of mystery to this, but there is an excitement and a desire, and it couldn't come at a better time, right? I mean, with oil now pushing up through 72, 73, 74, you've got a resumption of global demand. You've got recovery in the U.S. You've got vaccine rollouts. You're seeing miles flown at levels that we haven't seen since before the pandemic. The travel advisories just came out and said that miles flown is back to where we were. So we're actually seeing at a perfect point in time, people back in cars, people going back to work, and people are flying again. That's why you're seeing the resumption of the uptrend. So the timing is perfect, because we're in the risk management business. We provide tools to manage, and that means price up, price down. We're just getting the best, most robust set of tools in the hands of the customers in markets they already understand, in markets that are already electronified, that we've already globalized, and we've scaled across all client participants, buy side, sell side, hedge fund, pension fund, asset manager, bank, proprietary trading firm, individual trader. That's what we do. Anthony, we scale our client participation across all of our platforms and all of our markets. So, for us, this comes at a great time. So there's not a ton of mystery. The only mystery is, and how much fun is it going to be on July 12th when we get those contracts out there? And I think from client demand that we've seen so far, we're cautiously optimistic for a good, strong launch, as we've seen in micro contracts that we've launched in Bitcoin, micro contracts that we've launched in equities. So it's a well-worn playbook, and it's a great partnership path that we've pursued with our broker partners and with our distribution partners.
No, it's going to be big. I have no doubt, because I could just tell from the messages I've gotten over the years from people. It's highly anticipated. I think it's, like I said, it's just going to be a huge product. Thank you for all the information. Now, when we come back, Derek, we're going to talk about CVOL, which I think is really an awesome tool that traders need to know about. So we're going to go to CME's website. If you guys are listening to this on audio, you might want to run over to YouTube to check this out. If not, I'll take some clips and I'll put it in the post. But traders are going to be back in 45 seconds with Derek to talk about CVOL.
Replace your exchange with TradeStation Crypto. Dealing with multiple exchanges is complicated and it takes time, except with TradeStation Crypto. Because we are not an exchange. We are a broker. You have access to multiple pools of liquidity, all in one platform, in one account, one way. Trade crypto your way. Plus, earn interest on your eligible cryptocurrencies. Get started in one click.
Trade the global markets with Trading Technologies. TT is the world's fastest commercially available futures trading platform, now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tradingtechnologies.com. Welcome back, traders. Derek, thank you so much for explaining everything that traders need to know about the Micro WTI crude oil, which is coming out on July 12th. I know we're all looking forward to that. But now I want to talk about CVOL. You and I did a show on this a while back. You got me hooked on using this tool. I think it's great. I definitely go back and forth to it and use it as a resource. Explain to everybody what CVOL is.
Yeah, it's a really neat tool. And Anthony, we've talked over the years about the market leading franchise we've built in global options, right? And since we're the world's largest derivatives exchange and we have benchmark liquidity in every major asset class, from equities to FX to energy to ags to metals to fixed income, we run the world's largest options markets in those markets as well. And historically, the market, when it thinks about volatility, there's no real marker for asset class volatility. There's things like the VIX, and we've got the vol Q that we list at CME Group for volatility on the NASDAQ options. But really, there's been very little generated in terms of, well, what about WTI volatility? What about corn volatility? What about copper volatility? So over the last couple of years, and we talked about this before, we've developed our own proprietary volatility indices for doing exactly that. So using the benchmark liquidity in our options markets, we've now developed individual volatility indices for every single major benchmark that we trade in everything, with the exception of equities so far. We're working on equities right now, both at the product level, but we've also, in this last rollout of our product launch rollout from just a month ago, we've now actually built indices of benchmark products inside of energy. So we've got an energy basket that has, gasoline RBOB, that's got WTI, that's got heating oil. We've got an agricultural basket that's got corn, wheat, beans, and livestock in it. So we've been able to cut and slice and dice all of this wonderful, detailed, but very, very sophisticated math down into a really easy to understand, intuitive user interface that basically lets your listeners and your watchers understand exactly what's going on in the volatility profile of any of these products. And we're the only folks that can do that because we own all the data, because it's all coming off of our futures and options franchise. And now we've built our own proprietary tools for both metricing that and actually determining what those values are, and then making that available to everybody as well. So it's a really neat set of tools right now. They're not tradable products yet. Right now, we've developed the indices. These are end-of-day calculations, and we're making 2 years of historical data free to anybody that wants to get their hands on that. We actually have data going back, for the most part, back at least 10 years, and we're building on that over time as well. So it's a great way for customers to understand what's actually going on in the crude oil market, what's actually going on in the corn market, super cycle, what's happening in the copper market right now. Well, now we've created the tools for customers to understand exactly what the volatility profile is looking like, of the at-the-money volatility, a call skew, a put skew, the difference between the two, and a lot of really neat tools. So that's the kind of the high-level thumbnail sketch of this product. And the idea is to get it in the hands of your listeners and let them use that as a tool to better understand and make, informed trading decisions on.
Oh, I love it. And like I said, for me, it's something that I have used as a resource. I go and check it regularly. And I'm such a visual person that when I went to this site for the first time, actually, let's do a screen share right now. Let me pull it up and have you did this for me. So I'm going to ask that we do this for everybody else. I loved seeing this, and it really did help me just understand what's happening behind just the charts. I mean, we all look at charts all the time as traders, but this was giving me a look that I was unable to see before. So Derek, I want to type in CVOL.
Yeah.
And because I know everyone's going to be like, well, where do we go to get it? And you just click CVOL here on Google, and the first thing that comes up is CME Group Volatility Indexes. So I'm going to click on that, and then that takes us to this page. So, Derek, I'm just going to have you just walk me through it again. I know you've done this for me to help me understand it, and walk us through for our listeners.
Yeah, so you're absolutely right. Just go to any browser, just type in CVOL, C-V-O-L, and that stands for CME Volatility Indices. That's our trademark name. We think it's kind of snappy, and we think it resonates with people. And this is our landing page. And on the landing page, you have everything from what is CVOL and why do I care, all the way through to white papers and detailed understanding from the methodology, and then how to stay connected with us. We also have on this screen the reasons and kind of the underlying attributes of the index itself, and why it's useful as a marker for customers to understand what's actually happening in these underlying asset classes. What's really important is, as you scroll down through them, these are all hyperlink pages to go into much more granular levels of detail, but the meat and potatoes of the slide is scroll down a little bit more, and this is kind of the summary view of all of our CME indices. So you'll see these are arrayed by asset class. So the first one is fixed income, where you've got your treasury product set, and then you've got your STIRS complex. So you've got your Eurodollar products. Then you've got a range of FX products, and then a range of metals products, a range of energy products. And as you scroll down a bit more, you'll see the balance of the energy products and then ag products. You'll notice right now we don't yet have equity products on here. We're still working on that and through some licensing issues through our partners. So right now, this is kind of the executive dashboard of every one of these underlying products. So this, and just to orient people visually to what you're seeing here is, so for example, if you look at the energy line in nat gas, that very first line, so that first line in energy is nat gas, and then the symbol, you get NGVL, so you know exactly where to go find that thing. That's the next one is CVOL. That's the current level of the CME volatility index, which looks like 33.62. That little number, the change, just tells you what the change is versus previous day. The cool thing is that next little thing there is the trend. Now the trend tells you for the last 5 days, how has that changed? So you can see that's actually been, nat gas has been trending lower for the last 5 days. And so when those bars are green, that means it's up from the previous day. When it's red, it means it's down from the previous day. You and I are both visual learners. So you can scan this and go, wow, nat gas volatility is trending lower. And you let your eyes wander down. Wow, corn volatility is trending higher, but it reversed a little bit lower yesterday. So sticking with that nat gas bar, the next one is, it's a visual, it looks like a little slider scale. It tells you that for the period that you're looking at, it shows you the low of that period, 30.64, and the high of that period, 70.41. And that little slider there shows you, are you at the, where is today's level of 33.62 relative to the range over the last period that you're looking at. And then you've got these other things that kind of funky. It says DNVAR, that's down VAR. That actually means we take a VAR level or a volatility level of the put, which is the downside move. You've got the next one is skew. That's a difference between the down VAR and the up VAR. The next one is the up VAR, which is the volatility of the call itself. The next one is the volatility of the at the money. And then you've got skew and convexity. So you've got these sophisticated tools for giving everybody a sense for, okay, wow, what's the at the money doing? What's the downside doing? What's the upside doing? What's the risk reversal doing by looking at the skew number? So as folks get more comfortable reading the white papers, understanding what this data is telling them, you start to get a real sense for, wow, for example, you've got nat gas price volatility trending lower. You can look at that relative to price. It looks like it's sliding towards the lower end of the recent trading range, but wow, it looks like the skew is moving out a little bit. So that actually tells you that as the price is going down, volatility is going down, but there's an increasing desire and an increasing level of interest in the calls versus the puts. So there's a whole bunch of rich insights you can pull from this by just looking. This is just at the executive level, so the summary level. So that's what this general graph is telling you. But if you scroll up on this page, Anthony, just a little bit, and you can choose the time period you're looking at. So at the top, you see all those tabs. So the first one is the dashboard on that top level tab there. I can say I can look at the dashboard of all products, or I can just look at the individual asset class products by clicking on treasuries. And now it's just you get the blowout of just the treasuries, and you can go asset class by asset class. You can also choose where it says the high-low range. You can choose your period. If you want to look at what's gone on, if you click on say 1 month, for example, you'll see those numbers change. And you'll see, okay, now your high-low over 1 month is different than your high-low for 6 months. Today's level isn't going to change, but it gives you a different sense for, well, okay, what was the high-low over the last 1 month? What was it for the last 6 months? What was it year to date? What is it for the last 10 years? And you get a sense for kind of, where is this high on a relative scale of just 1 month, or is this high over the whole lifetime of this, for example? So you can do a number of things here to be able to look more specifically as to the periods that you're looking at. So just for kicks, Anthony, why don't you click into the WTI contract, and we'll show you what it looks like when you just launch a individual product. So when you launch this, you'll see some other options here. It will similarly let you choose your period. If I want to look over 1 month, 3 months, 6 months, or 1 year, you just click on that, your selection there when it says zoom. So if you want to say, I want to look back 6 months or 1 year or 2 years, click on that, and it just expands the graph out, and it gives you a bigger picture here. Now, the other thing is there's a drop down at the top left where it says select products. If you click on that little drop down, it will let you choose, and you can overlay, hey, I want to look at WTI, but I also want to look at gold, for example, or I want to look at RBOB. So if you click on gold there and you click apply, Now you'll actually have both of those products graphed up, and you can say over the 6 months, hey, what's the volatility profile looking like here? And how are these correlated? How are they not correlated? Are they discorrelated? You can put the underlying prices in as well as the volatility levels. You can look at that up VAR and down VAR and the skew. So this is the place where all kind of your meat and potatoes work is. The other drop down you get there at the top where it says the CVOL index. So if you click on that, that gives you the chance to look at, okay, if you want to look at the skew, for example. So if you just click on skew, so this is now going to tell you where and this is actually a really interesting graph here because gold is blue and WTI is that yellow color. So the skew means the difference between the call and the put. So how much of kind of a fear factor is there in terms of, hey, there's a huge premium for call over put. Well, if you go back over time on the gold, you'll actually see that that's been pretty close to zero for the last, 1 year. So it's been generally, the upside has been favored. So a higher volatility for calls than puts. But boy, look at what it looks like on the WTI chart. It's the inverse of that. You're actually seeing over the last year, you've actually seen the calls at a discount to the puts. But as the price has gone up, that difference has narrowed almost back to zero. Now it's increased a little bit here. So there are some really rich insights to pull from this. But I just kind of gave you like level 300 class in the details here. Because we've got a short period of time to show folks just a huge amount of insight to draw from this. Where I'd probably get folks to start is just back on that landing page. If you close out this graph here, back on the landing page and scroll to the top of this page, there's basic definitions of what CVOL is, what it measures, how the index is calculated, what the math underlying it is, how it actually relates to and how you should understand using the CVOL index number itself, what the up variance number represents, what the down variance number represents, how to interpret that. So we've got all these wonderful resources here in the form of white papers and some additional educational resources here that just let people interact with this. So this is a great place to start. Launch any web browser, type in CVOL, CVOL, get to this landing page and start to interact. And I look at this every day for every single product, right? When corn was going from 3.5 to 7, the first thing I'd say is, wow, how much has volatility gone up, and how reactive has volatility gone up been as a function of that price move? Now that we're seeing corn and beans come back down a little bit, I'd expect to see volatility come off. And if you look at corn there, that's exactly what you're seeing. And so the intuition behind this, if you understand volatility, makes a ton of sense. We've never been able to provide the tools in this very sophisticated yet easy to understand format and let people draw all this information for free out of the system. We're allowing customers to pull down 2 years of historical data for free because we want people to interact with it and get used to it and understand how it works. And the idea here is, give your listeners, give our customers the broadest set of tools to analyze what's happening in the market, understand what the market is telling them from the price action in the options, and everybody becomes a better, more informed trader and makes better informed decisions. So that's the concept, that's the application, that's the front end, and those are the tools that we're making available to folks to interact with this and really try to get their heads around what it is and what it's telling them.
That was awesome, and you nailed it when you said help traders make more informed decisions. I said before we went to the screen share that I'm a very visual person and I like to see just the landscape of what's happening. And that's the one thing I look at. So I'll go out as far as I want. You just see the last month and you look at what the treasuries have been doing, STRS, FX, and then you just go all the way down. I could see how everything is on the high, low CVOL. I like that. And with the markets that I'm trading, like we talked about with WTI, I pull that up. And to me, visually, I'll pick up things. And maybe, because I'm a technician and I like to look at chart patterns, I'm not an options person, Derek. I know that you understand options really well. You have an options background. For me, I don't. But this helps me in a way of, like I said, see the landscape, see what's going on, and just really get a different viewpoint than I mentioned, than just from looking at the charts, like what's happening in the market. I'll leave it up to the traders and using your imagination and I always say the artistic part of your trading. You may not be an options person, but this is some really good information that maybe something you pick up on can help you in your trading. That was, it's just very cool, Derek. And I wanted to say, let people know that if they want to stay informed with this, there's a link over here. You click Stay Informed. I'm on this email list. I recommend that you guys go ahead and do that, and just to keep up to date with the new launches of products and everything. Like I said, there's videos and stuff on here as well. So definitely go and check out this page. Derek, man, a lot to take in from today. We got the WTI, and now we're confirmed, right? July 12th is the date, right?
Yeah, hold us to it. We're out there. We're gonna launch those things, and we're super excited about the demand we've already seen and the feedback we've already gotten. We've got market makers lined up, or these things would be nice tight markets, would be deep liquid markets. So we're fully expecting that. The market has expected this of us, right? We've shown that we can get product out to market, use our channel partners, and I think that the micro equity indices have been just a huge success. We've seen great success in the Bitcoin. And so the beautiful thing is that in appealing to a retail trader that maybe is generally trading equities and now trading equity futures for the first time, now we're giving them those same consumable products in a wrapper that they're already trading, because they're already trading micro futures as CME Group. Now they can trade micro Bitcoin and now micro WTI and micro gold just as easily, because now they're inside and now they're starting to see the benefits of being in the future space where you can trade the underlying benchmarks in every major asset class. And that's the exciting part for us, developing tools specifically for the self-directed trader, the retail trader out there that is looking for a product that's right-sized from a risk point of view, but also right-sized from just a reward point of view, because we all know that not everybody can put up the huge amounts of margin on an institutional sized contract. And we've shown that these are beneficial to the end user and they're beneficial to the retail trader. Get them all operating in the same electronic market 24 hours a day. And that's the best possible outcome, bringing together all client participants in a lit market 24 hours a day.
Yeah, Derek, I really, hat tip to you. You listen to the clients, you listen to the customers. Like I said, every year, you and I see you at all the conferences, and you do a wonderful job of listening to all the clients and the customers out there. And I'm very happy that you brought this product to the traders. So thank you very much for that. And I know there's going to be more stuff coming up, so I look forward to more conversations with you. But until then, where can people go? I know we went to the CVOL site. Where do we want to send people? I'll drop a link, and I've been sending everybody to activetrader.cmegroup.com to learn more about micro WTI. Is that a good place, or where else maybe should they go?
No, that's the best place. And even if you just want to go, and that active trader site is the best because we have tools specifically designed for that active individual trader. If you're looking for just a broader perspective of CME Group, just www.cmegroup.com. You can find out who's on our board, who our management team are, what our financials are, when we pay our dividends, anything. And if you want to invest in CME Group or trade our products, we've got kind of soup to nuts, everything on the website. We spent a lot of time redoing the website to make it more navigable. So we think that that's a good place to start. But I would agree. I think that Active Trader landing page is the best, because that's where we develop tools specifically for the individual trader.
Yeah, I mean, I've worked with CME a lot over the years about the educational side of things, supporting all of these new products and letting new traders and even veteran and advanced traders learn about these products. And you guys have done a great job at that. So there's a ton of content on cmegroup.com to support these products. Derek, thank you so much, my friend, for coming on Futures Radio Show again.
Great to see you. I really wish we were doing it in person over a cocktail in Naples, but we'll get there. I'm optimistic we're going to get there here this year. We're on the other side of this thing and seeing light at the end of the tunnel.
I have a feeling this is going to be an epic GFLC.
That's the plan.
Cool, man. Thank you so much for coming on the show.
Thanks for having me. I appreciate it, Anthony. Take care.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudelli.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudelli.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudelli Productions.